Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this RTP discussion for CA final, Indirect Taxes. Now, let me tell you one thing, the May 23 RTP released by Institute is very simple compared to other RTPs of previous years. But let me also tell you, previous November 22 RTP had some mistakes, but in my view, May 23 RTP does not have even a single error. This time we are going to discuss this RTP in a different fashion. What I did is, I have solved the RTP. At each point, what was my thought process, I have just written it at the question. Near the question, I have mentioned that. So I'll just show you all those areas and teach you how do you read that question, how do you think at that point of time, and finally how do you arrive at those answers. So let's begin our revision test paper discussion. Now, first one, MCQ based, case study based MCQ, 5 questions, 10 marks. Let's have a look at the question. Remember one thing, you always first read the questions which are asked and then come to the main part of the case study so that you are able to think on those lines. But as I have already marked the answers, let's directly read the case study and let me tell you the approach which I followed so that you can follow it in your examination and do very well in your examination. So let's start. Mr. X is engaged in business of supplying FMCG to customers on retail as well as wholesale basis. It has its head office in Delhi and branches in Rajasthan and Madhya Pradesh. It is registered under GST in all the 3 states. Now let's have a look at the transactions which are carried out in January. X supplied goods to agent A from its factory located in Rajasthan. A sold them to unrelated wholesalers in the state of Rajasthan by issuing invoice in his own name. Agent is billing in his own name. That means it's a transaction covered by Schedule 1. X will bill to the agent, then agent is going to bill it further to the end consumers or the person to whom he is selling. The goods of like kind and quality are sold by A to unrelated customers for 1 lakh. A also purchased goods of like kind and quality from another independent supplier for 80,000 on the same day. Now 80,000 becomes the open market value, plus you have an option to use 90% of the price at which agent is selling it to the unrelated customers. So I have written 80,000 or 90,000 at the option of the supplier. So X can value it at 80,000 or 90,000. How did I get 90,000? He is selling it further for 1 lakh. 1 lakh into 90%. Basically, what we have applied is Rule 29 of CGST Rules 2017. Let's see further. X appointed a consultancy firm, Rudra Consultancy, registered in Rajasthan, to incorporate a new company and to undertake all legal formalities for incorporation of the said company for an agreed consideration of 35,000. Rudra Consultancy paid legal fees of 15,000 to relevant government department during incorporation. The GST invoice was issued by Rudra Consultancy on X branch in Rajasthan for 35,000 without any breakup of its own service and legal fee. Without any breakup. So you have not shown the breakup of own fees and legal fee. That's good. In that case, it would not result into a pure agent transaction. Entire 35,000 will be subject to GST. So 35,000 into 18% will come to 6,300 and Tell me whether ITC will be available to Rajasthan branch. The answer is yes, ITC would be eligible to Rajasthan branch. Then let's see the next one. X imported certain digital data warehousing service from Amazon Inc. located in US. The amount charged by Amazon Inc. was 5 lakh rupees. The services were for personal consumption of X and were not used in the course or furtherance of business. If it is not used in the course of furtherance of business, ITC will not be available for this. But let's see whether liability to pay is there. The transaction was billed to X on GST registration number of Rajasthan. Now the moment the transaction is billed to GST registration number of Mr. X, it becomes a B2B supply. It's a OIDAR service, and when it is a OIDAR service, B2B, from outside India to India, the recipient in India would be liable to pay GST. So this he will have to pay under reverse charge mechanism. RCM will be applicable, but he will not get ITC. Why will he not be eligible for ITC? Because he is using it for personal consumption. Okay, let's see the implication of the next point. X imported certain online gaming services from Bali Baba Inc. in China. The services were provided to X free of cost. Be very careful. So consideration is missing. Now, import of service, when consideration is missing, it should be in the course of business plus from a related person. Only then GST can apply. The open market value is 1 lakh. These services were for personal consumption. It's not in the course of business. It's not for consideration. Will GST apply? The answer is no, because it is not regarded as a supply at all. Okay, let's see further. Madhya Pradesh branch of X purchased goods worth 15 lakh, liable at 5%. from Madhya Pradesh dealer and procured certain input services worth 5 lakh, liable at 28%. Sir, is it an inverted tax structure case? Let's read further. In the later part of the month, X sold these goods for 18 lakh, liable at 5%. People, the rate of GST is same on purchase and sale. It will not be eligible for inverted tax structure refund. No sir, no, because the rate of GST on the goods is same. The output is subject to 5%, input is also subject to 5%. Plus, in addition to that, CBIC circular had clearly said that a trader dealing in the same goods, purchase and sale, even if there is a reduction of tax, still he will not be eligible for refund. So in this case, there is no question of refund under inverted tax structure. Yeah, you will be eligible for ITC for this 5 lakh. You will be eligible for ITC for this 15 lakh. 15 lakh and 5 lakh will be eligible for ITC. Okay. Then let's see the 6th point. So I have just made a calculation here. Let me show you the calculation. 75,000 plus 1 lakh 40. Sir, how did you get 75,000? 75,000 is 15 lakh into 5%. And how do you get 1 lakh 40? 5 lakh into 28%. So ITC is 2 lakh 15,000. Output will be 18 lakh into 5%. That is 90,000. So will refund be eligible? The answer is no. Inverted tax structure refund will be nil. Plus, is GST applicable on this? Yes. Output is 90,000. ITC 2,15,000. So tax payable will be nil. In fact, the ITC will be carried forward. Okay. Then Rajasthan branch has paid a sponsorship fee of 5 lakh, to Ganga Solutions registered in Rajasthan for entertainment event organized by Ganga Solution in Haryana. People, be very careful. At the beginning, the case study says X. That means he's an individual. And sponsorship services RCM is applicable only when it is received by a partnership firm or body corporate. So will RCM be applicable? The answer is no, because he is an individual. RCM will not be applicable. Now let's go through the case study questions. In fact, we have answered everything. We will just see all those case study questions. Let's see it further. Then opening balance, obviously these points are mentioned. Opening balance of ITC is nil. No inward and outward supply other than these transactions. Other conditions are satisfied. Intra 9 and 9, inter 18, until and unless the rate is specifically given in the question. Okay, let's see it further. Based on the above facts, choose the most appropriate answer from 1 to 5. In respect of goods supplied by X to agent A in Rajasthan, what would be the value of supply? Agent, open market value or 90% of the price at which he supplies further? The answer would be 80,000 or 90,000 at the option of X. Okay. GST payable in respect of incorporation of company, 35,000, entire 35,000 will be liable. Will ITC be eligible? The answer is yes, ITC will be eligible. Then, which of the following statements is true in respect of import of digital data warehousing and online gaming? See, online gaming consideration was missing. It was not in the course or furtherance of business, not from a related party. GST would not apply. Digital data warehousing, B2B service, OIDR, X will have to pay under reverse charge mechanism, plus no ITC because it was for personal consumption. So the answer would be 90,000 payable under reverse charge, that is 5 lakh into 18%, and no ITC is available to Mr. X. Okay, let's take it forward. Which of the following statement is true in respect of sponsorship fee paid by Rajasthan branch of X to Ganga Solutions? Well, sponsorship fee, Ganga Solution is liable to pay C and S because place of supply will be Rajasthan. Ganga Solution is in Rajasthan, X is also in Rajasthan. Though the event is held in Haryana, don't forget, organization of an event, B2B transaction, when it is supplied to a registered person, the place of supply will be location of the registered person, not where the event was held. So that's why the answer would be intrastate supply and C plus S would be applicable. It would not be a case of reverse charge mechanism. Okay, then compute the net liability of X in Madhya Pradesh and the amount of ITC refund. Oh, they are asking about inverted tax structure. Will we get inverted tax structure refund? The answer is no, if any available to X. So net GST payable will be nil and no refund is available to Mr. X. Okay, why is net GST payable nil, sir? Because the output was 90,000, input was much higher than 90,000. Okay, let's take it forward. Let's see further. Dhumketu, registered under GST in Virar, Maharashtra, is appointed as a Del Credre agent of Big Bang Limited. He sells shoes to his customers within the same state. Big Bang is also registered under GST in Maharashtra. During the current financial year, Big Bang supplied taxable goods worth 9.5 crore, whose open market value was 9.82 crore. from Navi Mumbai unit to Dhumketu. Dhumketu is a agent. Dhumketu further sold these goods for 10.10 crore by raising invoice using his own GSTIN. Again, principal agent is billing in his name, so it would be included in his value of supply. Dhumketu has received commission of 65 lakh from Big Bang Limited during the year and has guaranteed payment of value of such goods from customers to Big Bang Limited. Dhumketu has also provided financial assistance in the form of larger credit period to customer on which he has earned 25 lakh as interest. Compute value of supply and both wish to adopt minimum value of supply. This is what I need you to be very careful of. He wants the minimum value to be chosen. That means you will have to go by the best option available. Now, they have asked you the value of supply for Big Bang and Dhumketu. Now, let's have a look. See, one option which you have is value it at 9.82 crores. This is one option available. But you open market value or 90% of the price at which the agent is supplying it further. So 90% of 10.10 crore will be 9.09 crore. So you can use 9.09 crore, which is a better option compared to 9.82 crore. So we will go by 10.10 into 90%. That is 9.09. But for the agent, 10.10 crore will be considered plus 65 lakh plus interest will also be considered as part of taxable value. Reason, agent is billing in his own name, so the interest which he is earning is for the taxable supply, and hence interest on delayed payment of consideration for a taxable supply will form part of value. So for Big Bang it would be 9.09. For Dhumketu it will be 10.10 plus 65 lakh. 65 lakh is the commission which he has earned plus 25 lakh which he has earned as interest. All the three will be considered as part of his turnover, and the total will come to 90 lakh plus 10.10, 11 crore. So 9.09 and 11 crore. Let's have a look. So the answer is Big Bang 9.09 and Dhumketu 11 crores. Fine. Let's see the next one. Which of the following activities is liable to GST? Let's see which is liable. Hospitals supplying to patients, food being supplied by hospital to patients not admitted, or to their attendants and visitors, taxable, because only inpatient it becomes part of the principal supply and enjoys an exemption. This will be taxable. Transportation of passengers, non-AC railways, exempt. Then brand ambassador, folk dance, the moment it is as a brand ambassador, taxable. Agriculture produced by aircraft does not enjoy this exemption, it would be liable to GST. The exemption for agriculture produce is only for rail, vessel, GTA. Loading, unloading, packing, storage, warehousing of rice. Oh, this enjoys an exemption. Rice, these activities enjoy an exemption. So second one and fifth one are exempt, other three will be taxable. They have asked us liable to GST and liable. The answer is C. Okay, let's see it further. Which of the following statements is correct in relation to value of imported goods under Rule 4, that is identical goods? Finally, a custom question. Identical goods. Let's see which is true. When we have to find which is true out of 4 options, we'll have to see what is wrong in each option. So what I did is, while I was reading, I checked what was wrong or what word was wrong in each of those lines. I made a cross mark of that. Let me show it to you. The transaction value of identical goods in a sale at any commercial level. No. Same commercial level, substantially the same quantity. That is the value which is adopted as identical goods value. So any commercial level would be wrong. Transaction value of identical goods at same commercial level, correct. And in any quantity, that's the mistake. Transaction value of identical goods at same commercial level and substantially the same quantity. This seems to be correct. Nothing is wrong in this at the first reading. Then let's see the last one. Transaction value of identical goods at any commercial level, any quantity. This is nonsense. This is surely wrong. So the right answer would be same commercial level, substantially the same quantity. Okay, great. Let's see 9th one. Safeguard duty cannot be imposed if. Cannot be imposed. So we will have to find out when it cannot be imposed. That means when do you get an exemption from safeguard duty? The article on which it is proposed to be imposed originates from a developed country. Sorry, developed country does not have any exemption. The article is coming from a developing country, not more than 5%. Sorry, this is also a wrong statement. The article on which it is proposed originates from more than one developing country, okay? And its aggregate share from developing countries each with less than 3% does not exceed 9%. Yes, less than 3% does not exceed 9% in total. So those developing countries which have less than 3%, total of those does not exceed 9%, enjoys an exemption. The article is from special category state. This is completely wrong. Okay. Now, then comes a lengthier question, question number 10. Question number 10, slightly lengthier, but Institute has asked this type of question earlier as well. That's why I told you this time the RTP is much easier compared to the last one. So November 22 RTP was very good. I would suggest all those writing in May 23 to surely go through November 22 RTP as well. Now, let's see the 10th one. Easy question. The importance of this question was you had to find out output tax, you had to find out input tax, and this was a question where you'll have to be strong with E and F. Exempt supply plus something which is liable under reverse charge mechanism, that E, and F. So basically rule 42 you need to be very careful. F is total supply, E is taxable supply. So that's what you need to be careful of. Let's see. Janki Nandan Associates, a proprietorship firm in Lucknow registered under GST, manufactures 3 taxable products: Zeta, Sigma, Omega. Now let's first see what they want from us. That's important. See, what they want from us is you are required to calculate net GST liability. All the above amounts are exclusive of GST. For goods and services, rate is given. For goods it is 12%, for services it is 18%. So this is given. Then this is an important line. Ignore bifurcation of CGST, SGST, IGST for the sake of simplicity. You will be the happiest. We can do it on total basis, sir. Yes, you can do it on total basis. Then, subject to the information given, assume all other conditions for availing ITC is fulfilled. Turnover of Janki Nandan Associate in last year is 72 lakh. Whenever they give you last year turnover, you very well know that there will be legal service or you might have received government related service, because if your last year turnover is below registration limit, then in that case you enjoy a exemption, correct? So be careful about that. Otherwise, that's the purpose for giving you last year turnover. Now let's see each of these. Let's have a look. So Janki Nandan, proprietorship firm, 3 taxable products are manufactured: Zeta, Sigma, Omega. The following information is provided for a particular tax period. Omega and Zeta are sold in domestic market as well as exported outside India. The domestic turnover excluding export for Zeta and Omega are 21 lakh and 15 lakh. See, 21 lakh and 15 lakh will be liable. 21 lakh and 15 lakh total 36 lakh. See, I have written it here 36 lakh and I have multiplied with 12% because question says 12% for goods, 18% for services. So I have taken that information from that area. Okay, then export turnover of Zeta with payment of IGST. Be very careful. It is saying with payment of IGST. That means you will have to show it in the output calculation. With payment of IGST, not eligible for merchant export. So you can't apply 0.1%. Is 3.75 lakh. So I have taken 3.75 lakh multiplied with 12%. This is with payment. Then Omega worth 15 lakh is exported. So 15 lakh exported, nothing. Export under bond or LUT. The question mentions it. I recall the question mentions at one place all exports unless mentioned are under letter of undertaking, and that's why we have taken it as output impact will be 0 on this. Then tax on Sigma is payable under reverse charge mechanism. Oh, Sigma is payable under reverse charge mechanism. Sigma is being sold only in domestic market and the domestic turnover is 9 lakh. So this 9 lakh, will it be considered as E? Yes. And will there be any impact on output? No. Output will be 0. Recipient is paying the tax, so this will be considered as E. The firm is also engaged in providing taxable consultancy service. Consultancy service of 30 lakh have been provided to unrelated customers located in foreign countries. In all cases, consideration has been received in convertible foreign exchange. Consideration received in convertible foreign exchange, again 30 lakh, nothing will apply in output. This will be considered as E, exempt supply? No, there is no need to reverse ITC for this. Okay, firm sold shares held by it for 375 lakhs. People, 375 lakhs. Securities, it is valued at 1% for the purpose of E by F. So 375 into 1% will come to 3.75 lakh. Will there be output on sale of securities? No, there will be no output on sale of securities. Then, due to shortage of funds, it sold one of its factory building for 180 lakh, excluding stamp duty 3.5 lakh being 2%. Now 3.5 lakh being 2%. See, 3.5 divided by 2%. How much does that come to? 3.5 divided by 2% will come to 175 lakh. Will you pay output tax on sale of building? No, covered by negative list. But will it form part of E? The answer is yes, this will form part of E. Then, firm earned interest of 6 lakh on money invested in fixed deposit. Remember, interest earned, except interest earned by banks and financial institutions, will not form part of E. So, interest earned by anyone will not form part of E. Though it is an exempt supply, but it will not form part of E. But will it form part of F? Yes, for examination, you have to take the stand that it will form part of total turnover, that is F. Now, on this 6 lakh interest, will GST be applicable? No, it is an exempt supply. So, here we calculated output. This is your entire output tax, which comes to 4,77,000. Out of this, what all is E? See, this is F, 278.5 lakhs, which is the total of all this. Now, what all is E? E, we have 9 lakh, we have 3.75 lakh, we have 175 lakh, and total of this comes to 187.75 lakh. So to this extent, you will have to reverse input tax credit. And you know the output. Now let's see the ITC information. Let's see it further. The details of input and input services availed by the firm for the said tax period are as under. Firm received legal service from advocate. I expected this. Trust me, when you read the last line preceding financial year, one of the RCM points is possible. For Zeta, for which it was 5.25 lakh. So 5.25 lakh into 18% comes to 94,500. This will come in RCM payable. It will also form part of ITC. But don't forget, don't do common ITC calculation for this, because it is only for Zeta. And Zeta is a taxable product. It is not covered by reverse charge mechanism. It's not a case where other person is paying. That's a different product. Zeta is a taxable product. It is used only for Zeta, exclusively used for Zeta. ITC will be fully available. Don't do E by F for this. Okay. Remaining input and input services availed during the tax period, 52.5 lakh and 22.5 lakh have been commonly used for supply of goods and services. So inputs is 52.5. So 52.5 you'll apply 12%, which comes to 6.3 lakhs. And 22.5 you'll apply 18%, which comes to 4,05,000. So 6.3 plus 4,05,000. Common input is 10,35,000. Now 10,35,000 you will do E by F. That much you will reverse. Balance will be eligible. Okay. See, I was just mentioning you this. Exports are made under LUT, letter of undertaking. So on all exports, except where it is mentioned with payment of IGST, you will not discharge output tax. Okay. Now let's see the working. So output tax, this is what you got, 477. This comes here. Output tax. Now ITC 10,35,000. This 10,35,000 we have taken it here and multiplied with E by F. This is E, this is F. So this will be the reversal, and once you reverse, balance ITC would be available. Plus RCM payable 94,500 has to be shown. ITC 94,500 has to be shown. The net impact will be 0, but in the examination, do you have to present this properly? Yes, it has to be presented very clearly so that examiner is able to appreciate. So how do you present it? Output tax minus input tax, and at the end you will add RCM payable. And once you do this, you will get an answer. 1,39,742 is payable through e-cash ledger. And what have you used? E-credit. E-credit 337 plus 94,500. Add these two, that is what is paid through e-credit, because this is common ITC eligible and this is RCM ITC. As it is ITC for taxable product, fully eligible. So presentation needs to be kept in mind. Otherwise, arriving at the answer here was very, very simple. Clear? Okay, great. Now there are small questions. Let's see one by one. I mean, this will not take time. Let's see these questions. Okay. Jigyasa Limited has multiple wholesale outlets of toys in Mumbai. It receives an order for toys worth 1,20,000 including 18% GST from Upasana, owner of a retail toy store in Delhi. So While checking the stock, it is found that the order worth 55,000 can be fulfilled from company's Bandra store and remaining 65,000 from Goregaon Mumbai store. Both the stores are instructed to issue separate invoice for goods sent to Upasana. The goods are transported to Upasana in Delhi in a single conveyance owned by Jaydev Transporter. You are required to advise Jigyasa with regard to issuance of e-way bill. Is e-way bill required? Yes. People, don't forget, don't try to remove GST. For e-way bill purposes, it is including GST that you check 50,000 limit. So for both the consignments, you are required to generate e-way bills separately. Even CBIC has given a frequently asked questions FAQ. They have clearly mentioned that separate invoices you will have to issue separate e-way bill. So you are required to issue e-way bill for both 55,000 and 65,000, both e-way bills, though going in the same conveyance. As two invoices are there, two separate e-way bills are required to be generated. Clear? Okay. Let's see the next one. Again a simple one. Vivid Private Limited is engaged in supplying various services in Bangalore. It is registered in the state of Karnataka. It has furnished the following information for the month of June. Let's see what we have to calculate. Being clear of what has to be calculated is very important. Calculate net GST payable for June, assuming that all amounts are exclusive and rate wherever not mentioned 18%. Okay. Now we know what we have to calculate. Net GST payable. Let's see. Services provided by way of fumigation in warehouse of agriculture produce. This has become taxable. Recent amendment. I hope you have gone through the amendment lecture. Service of transportation of passengers by metered cab through Webcastle, an e-commerce operator. E-commerce operator, metered cab, who will pay? Eco will pay. Metered cab, Eco will pay, sir? Yeah. Eco will pay. It will not come in my output liability. 4 buses each with seating capacity of 72 passengers given on hire to state transport undertaking. More than 12 passengers. Such buses run on the route and timing decided by state transport undertaking. Basically, contract carriage given on hire. So when you are giving it on hire, it basically requires you to, okay, so this will enjoy an exemption. Giving on hire to a state transport undertaking enjoys an exemption. There would not be any GST implication on this. Then goods transport service received from GTA for transporting goods to be used in respect of buses given on hire to state transport undertaking. More than 12 passengers. Will you get an exemption? The answer is yes. Exemption would be available for this. Now let's see it further. Goods transport service received from GTA for transporting goods to be used in respect of buses given on hire to state transport undertaking. Tax is payable at 12%. See, tax is payable at 12%. Though rate notification is not there for you, when they are saying tax is payable at 12%, the logical assumption which you can do is it is a case of forward charge where GTA would be required to pay tax. Even institute has said this in the answer that we have assumed that supplier is going to pay the tax. However, the impact is based on that, saying that supplier would pay the tax. Then the question is whether we will get ITC for this. The answer is no, ITC will not be available because it is used for hiring of vehicle which was given for state transport undertaking for those parts. So as it is being used for a exempt supply, you will not be eligible for ITC. So what would be the tax payable, sir? The tax payable here is very simple. This 13 lakh into 18%. which comes to 2,34,000. That's the only thing which you are going to pay as output. ITC, sir, nothing is there relation to ITC. One entry was there, that will also not be eligible for ITC. Clear? Great. Let's move forward. Easy one again. Swasthya Nursing Home, a clinical establishment, offers the following services. Rooms provided to inpatient where room charges per day was 6,500. Recent amendment, more than 5,000 per day, room charges will be taxable. But if it was ICU, then it wouldn't have been taxable. Then plastic surgery conducted for repair of cleft lip of newborn baby. People, though it's plastic surgery, but it is for a necessity, it will enjoy a exemption. Air ambulance services, see, ambulance services by any person enjoys an exemption. Supply of food to inpatient as per advice of doctors enjoys an exemption. The food is prepared by its employees and nothing is outsourced. Homeopathy is also a recognized system of medicine, exempt. Then Swasthya Nursing Home also operates cord blood bank for preservation of stem cells. Recent amendment, this has become taxable. You are required to tell whether GST is payable for each of the above services, and you had to explain which is exempt, which is taxable. Okay, let's see it further. Alpha is a manufacturer and supplier of machine in India. Gamma of US helps Alpha in selling the machine by identifying clients in US. Beta wants to purchase this machine and helps in finalizing of the contract of the machine by Alpha to Beta. Gamma charges Alpha for the services of locating Beta and helping finalizing the sale of machine between Alpha and Beta. So the main transaction is between Alpha and Beta. Gamma is charging a commission because of facilitating of the transaction. Gamma is in US, for which Gamma invoices Alpha and is paid by Alpha for the same. Determine place of supply for the services provided by Gamma to Alpha. First of all, Gamma to Alpha. Gamma is outside India, Alpha is in India. This would be covered under section 13 of IGST Act because one of them is outside India. Now, once you apply 13, intermediary service, it would be a case of 13.8. Place of supply will be location of the supplier. Where is the supplier? The supplier is in US, so place of supply will be outside India, and hence the place of supply being outside India, GST would not be applicable. They have asked only place of supply, so we can stick to place of supply being location of the supplier, that is Gamma outside India. Okay, then a very small theoretical question. Let's see. Answer the following questions elaborating the relevant provision under section 44. Who is required to furnish annual return and what is the due date? People, who is required to furnish annual return? All registered persons are required to furnish annual return other than CTP, NRTP, ISD, TDS, TCS. TDS and TCS? No. TCS is required to submit one annual statement but not annual return. Due date, oh, you all know the due date very well, 31st December. Prescribed form 9 and 9A is the annual return. 9 by all registered persons other than composition dealer. 9A by composition dealer, but 9A no one has seen in real life, no one has filed ever. 9A is only there in the law, it's not there in real life. Then annual statement will be 9B. Then who is required to furnish self certified reconciliation statement? Only when turnover exceeds 5 crores, aggregate turnover exceeds 5 crores, then you have to submit 9C reconciliation statement, which is self-certified. Fairly simple question. Okay, then let's see the next one. Nitya Associates is engaged in supplying taxable services in Kerala. Assistant Commissioner of Central Tax has passed a adjudication order under Section 73, which was received by Nitya Associates on 18th October. In the said order, GST liability of 6 lakh C plus S, 3 lakh C, 3 lakh S, was decided along with interest at 18% per annum for the number of delayed days and penalty of 60,000, that is 10% penalty. Nitya Associates was in complete disagreement with the said order, so they filed an appeal to Appellate authority. Determine the pre-deposit. Pre-deposit, people, first level, pre-deposit. Admitted liability plus 10% of the disputed tax. Here you are disputing entire 6 lakh. So 6 lakh into 10%, 60,000 will be your pre-deposit. Whether your answer would be different if Nitya Associates appeals only against part of the demanded amount, say 4 lakh. They appeal for 4 lakh and admit the balance liability of tax amounting to 2 lakh and proportionate penalty. So 2 lakh they have agreed. So 2 lakh plus interest on that plus 20,000 penalty. This 3 will become admitted liability because it says admitted liability. It does not say admitted tax. Admitted liability, tax, interest, penalty, and with that 10% of disputed tax. 10% now in the second case will be 4 lakh. 4 lakh into 10% is what you will have to pay. So let's see the answer. First level, you know very well, 10%, 30,000, 30,000, and if it is 4 lakh appeal, then first 10% on this 4 lakh plus 2 lakh rupees, your admitted tax plus admitted interest plus admitted penalty. This is what you'll have to pay, and you need to present the answer very well. First you need to write the provision clearly. Once you write the provision, then you can give your final answers. Okay, now let's see the next one. Robert and Sons engaged in supply of taxable goods. It enters into a contract to supply a consignment of said goods. However, since it is unable to determine the value of the goods to be supplied by it, it applies for payment of tax on provisional basis. Oh, it goes for provisional assessment. Wonderful. Along with required documents in support of the request. On 7 January, an order allowing payment of tax on provisional basis was passed by the proper officer, indicating the value on the basis of which the assessment is allowed on provisional basis and the amount for which the bond is to be executed and security is to be furnished. Robert & Sons complies with the same and supplies the goods on 29th January. Thereafter, paying the tax on provisional basis for the said consignment on 19th Feb. See, 29th January, what is the due date for payment? 29th January, the due date for payment is 20th Feb, but he has paid the tax on 19th Feb. Consequent to final assessment order passed by proper officer on 18th March, 1,80,000 becomes due. You have to pay 180 extra. Robert & Sons pays the said amount on 9th April. Determine interest payable. First of all, from where will interest start? Interest starts from the due date for payment of such tax till the date of payment of such tax. The due date for payment of tax, which is relatable to 29th January, will be 20th Feb. So 20th Feb to 9th April. So 8 days in February, 31 days in March and 9th April. 31, 9, 8. Total 3198. Total 48 days. For 48 days, 18% per annum on 1,80,000. Let's see the answer. From 20th Feb to 9th April. Totally 48 days. This would be the interest which you will be required to pay. Clear? Okay. Now let's see the next one. Jumbo Steels imported heavy machine from US. The cost of the machine at the factory of the exporter was 10,000 USD. Transportation charges 500 USD. From factory of exporter to the port of shipment. Oh, this is at the exporter's country. At the load port, handling charges of $50 for loading of the machine in the ship. This is also at the export port. Freight charges for exporting to India 1000 USD. It is ship, so you can use actuals. Jumbo Steel is paying buying commission of $50. Buying commission is not liable. Rule 10 clearly says the buying commission will not be liable. From the information given above, calculate the assessable value of imported goods, assuming that actual insurance is not ascertainable. So 1.125% is what you will apply, and exchange rate is 70 rupees. Sir, will we remove that $50 and $500? The answer is no. You will not remove it. You will keep it as part of FOB. Then you will add freight. Then you will add insurance of 1.125%. 550 you can exclude only when, first, this information is available. Second, you should have been using a percentage, that is 20% as freight in the calculation. Only then you could have excluded, because that 20% would have been considered already included in 20%. So 20% would have been considered already including all the charges from the exporter's premise till the Indian port. But here, as you are not considering 20%, you are considering actuals, so you will go by the actuals. So 10,000, then 500, then 50. This will be FOB 10,550 plus freight 1,000 plus on 10,550 you will apply 1.125%, multiply with 70 and you get your answer. Let's see the answer. 10,550 plus freight plus insurance, you get your CIF, and now CIF you multiply with 70, you get 8,16,808. Don't forget to mention the symbols. In exam, very important to mention rupee symbol and dollar symbol in such cases. Though I have not written it in a hurry, I have completed. You write it properly, people. Write dollar INR clearly. Yes? Okay, great. Okay, let's see the 19th one. 19th one basically is a case law based question. Let's see. Balu Limited imported super kerosene oil and stored it in the warehouse. Okay, he stored it in the warehouse. An ex-bond bill of entry for home consumption was filed and duty was paid as per relevant rate prevalent on the date of presentation of bill of entry. Order for clearance was passed. Okay, so ex-bond bill of entry filed, payment made, order for clearance passed. On account of highly combustible nature of SKO, it's dangerous. Importer made an application to permit storage of oil in same warehouse until actual clearance for sale or use. For some time they requested, let me store it here. See, I have already paid the duty. These are duty paid goods. So I am asking for warehousing without warehousing. I don't want to apply for into bond because I have already cleared it for home consumption. But I want to store it in the warehouse. This is called as warehousing without warehousing. First warehousing indicates the storage activity, second warehousing without going by the process, because I have already paid the duty. Is it allowed? The answer is yes. Warehousing without warehousing is allowed. Section 49. Application was allowed. However, rate of duty increased when the goods were actually removed from the warehouse. The department demanded differential duty. Balu challenged the demand. Will it succeed? Discuss briefly with the support of decided case law. So, there was a judgment, Bicolori, where it was Supreme Court decision, where it was clearly very old decision, but Supreme Court has mentioned once duty is paid, now goods are allowed to be stored in the warehouse. Additional duty cannot be demanded even if there is a increase in rate of duty. So even logically, when you think, you'll get an answer that duty is already paid. Thereafter, if it continues in the warehouse, obviously additional custom duty will not be required to be paid. That was the decision of Supreme Court, and based on that, the answer would be framed. Okay. Finally, we enter into the last question. Let's see the last one. ABC Limited imported offset printing machine from Germany for 5 crores and the bill of entry for home consumption was cleared in April on payment of duty. However, due to certain technical glitches, the said machine could not start functioning and the said machine was sent back to the supplier for repairs in May. So you imported it, you paid custom duty, you have sent back for repair. The manufacturer of machine in Germany has made necessary repair and had sent back the machine to ABC Limited. ABC Limited re-imported the machine without any remanufacturing, reprocessing in September. In such cases, custom duty is applicable on fair cost of repair plus to and fro freight and insurance charges. Since the machine was having manufacturing defect, repairs were carried out without any charges for repair. However, fair cost of repair including cost of material of 70 lakh would have been 90 lakh. So total fair cost of repair is 90 lakh. Actual insurance and freight charges is 7.5 lakh each side. Careful, each side. This was a keyword. 7.5 lakh each side. So to and fro, both insurance and freight will be added. So 7.5 plus 7.5 total becomes 15 lakh. Assume that the rate of basic custom duty is 10%, SWS is 10%, integrated tax is 18%. Compute the custom duty payable. So first of all, custom duty will apply only on this 90 lakh plus 7.5 lakh into 2, that is 15 lakh. Total 90 lakh plus 15 lakh, 1 crore 5 lakh. So you will apply custom duty on 105. Now 105, you apply BCD 10%, SWS and then IGST. Total custom duty including IGST would be 32 lakh 52,900. BCD 10%, SWS 10%, IGST 18%. You know what to apply on what. BCD you will apply on 105 lakh. SWS you will apply only on BCD, and IGST you will apply on all the three because IGST is liable on all the three, and this will be your custom duty and IGST payable. Obviously, yes, institute has also given the answer like this, that a custom duty and IGST payable will be this. So you in the answer also you can show the computation and write custom duty and IGST payable. That is the stand taken by institute. So this was the revision test paper. Wishing you all the best for your examination. Do well in your examination. Take care. Bye bye.